Hello, everybody. This is James Kempski with Ibuyerpro.com and Mallard Realty Group. Today, we are going to be talking about real estate stocks, and we're going to be talking about the 10-year note, how it affects mortgage rates. So that's what I have pulled up here on our screen that we're recording right now. So the basics of this is how Treasury notes affect mortgage rates, okay? A lot of people ask, why do interest rates go up or why do interest rates go down? Well, there's factors that are unknown to a lot of people, and this is why I'm going to try to clear some of this up. And to let you know, stocks are the first thing versus the 10-year note that make an interest rate go up or down. So if you take a look at the real estate stocks that I have up here, let me pull this up. You're going to see I have quite a few of them. Okay. Some of these I own, some of these I don't own, just to let everybody know. So the main one that I like to look for, believe it or not, is Redfin. Okay. Redfin, they're a website that people go to look for houses. And if they like a house that they want to see, they'll go ahead and schedule an appointment to go see it. And if that person works with a Redfin agent, that agent has to give some of their commission to Redfin. So the more business Redfin gets, the higher their stock goes, which is indication to me that real estate is going up in the right direction. It's not going down. Now, if you notice here, we're going to go to max. All right. Actually, let's go to 5-year, make it simpler. Okay. So if you go to the 5-year, and if we look at the year 2020 going into January 10th, 2020. Okay, let's focus on that. Okay, it was only at $21.85. Right. Now that was just before the pandemic hit. Okay, and then when the pandemic hit, we have a low in March 27th of 2020 at $11.60 per share. And then all of a sudden, you got April, it's kicking in. We're back up to the levels. Now we're in August. Okay, that's when the bubble really started to expand. $48.31 we're up to now per share for Redfin. All right, and then on the high level in February of this year, February 19th, 2021, $96.59. This is when everyone's scrambling to get real estate. So this means a month or 2 months before, possibly 3 months before, people started really scrambling to look to buy houses. All right. It takes about 45 days to close on a house if you're doing a traditional loan or mortgage. A lot of mortgage companies can do it sooner, less than 30 days. Some can even do it at 20 days. But I like to go ahead and use the 45-day rule for what we're doing right now. And at $76.56 back in, and that was November. Okay, back in February, it was $96 of 2021. Today, right now, okay, $53.61, even though it's showing that it's $53.60 here. So that's how I go by Redfin. Now we're going to talk 10-year Treasury bonds. Okay, so we put over here the relationship. All right, now a 10-year note. This is a little chart here that shows a 30-year fixed rate mortgage and 10-year Treasury yields. Okay, so we have a 30-year fixed rate in the year 2000. All right, 21 years ago, we're at 8.25% interest rate. Okay, and now we're going down. 2006, where our crash is right around here. 2000, here's the crash. All right, and now boom, interest rates 5.1% during the real estate crash. All right, now we're going down even lower. All right, 2018, 19, lower, 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 boom. Now they're creeping up a little bit here. You see a little leg, okay? This is interest rates. We're at the 30-year, all right? Now we're in April, 3.2. Let's go over here to the height of October 18. Let me find a 19. July 2019, 3.75, okay? So that's how a 10-year Treasury note here. See how the graph is like almost exact if you look at this graph right here. Okay. I mean, it's exact. So monitor your 10-year Treasury yield. let me show you where it's at right now. Okay. So bond center, here we go. Pull this screen over here. Okay. Where you're at right now for a 10-year treasury bond. Okay. Let this thing load up here. All right. So this is the one we look at, the treasury yield 10 years. We're at 1.60. Okay. The 30-year treasury is at 2.29. Okay. Forever 21. That's not me. All right. So now we're going to go back over here and get a good explanation of what Investopedia says. All right. All right. And well, let's get the relationship between. Here we go. Let's go back to this. Okay. Here we go. This, thebalance.com. This gives you really good information. Okay. So here you go. Fixed rate mortgages. And this is April 30th, 2021. So we're a month and a couple of days past that, but this gives you a good overview. All right. It says here, these rates follow the yields on U.S. Treasury notes. Yields on the 10-year Treasury note hit an all-time low of 0.54 on March the 9th, 2020, due to the global health crisis. And they were inching back around 0.90 in December. So that goes to show you how what was happening. Okay. So here's our the Fed funds rate and adjustable rate mortgages. Treasury yields only affect fixed rate mortgages. A 10-year note affects 15 and 30-year mortgages. Okay. So that's why you focus on the 10-year note. All right. Now let's go back to our stock list. Okay. So let's go back over here. We're going to go back to our stock list. I also like to follow, where'd I go? Toll Brothers. This is a luxury home builder. Toll Brothers are. All right. So right now we're sitting at $60.31 a share for Toll Brothers. Okay. But if we go to 5-year, all right, here we go again. March 2020, the pandemic hits and boom, $15.82. I should have bought that, but I don't own Toll Brothers. Okay. And then now we start inching up. We are at February, let's go with February 2021. We're at 53. And now we went down a little bit today. At the height, it was at $67.65. Okay. Here we're going to do a comparison with D.R. Horton. All right. So if you notice, D.R. Horton and Toll Brothers, I might as well go to Pulte Group also. Okay. There we go. We'll do 3 of them. And now we have the Toll Brothers is blue, D.R. Horton is yellow, Pulte Group is a light blue. Notice the trend. All right. Now we're at 5 years. Okay. 5-year. Here's a trend. They are almost, the graph is almost perfect. Okay. Look at that. Look at that. It's exact. Now, if you go to max, all right, check this out. Toll Brothers maximum when they started in 81. Okay. All of them. All right. We're going all the way to the 80s and 90s. All right, so let's go to 2020. We're going to go back 21 years. All right, here you go again. All right, poultry's just hot here. So see how the lines are following each other? Now, Poultry Group looks like they were doing quite a bit of building. And then here's your pandemic. All of them just crashing down. Look at that. Okay, let's go back over here and we will check out this one, okay? Now, a lot of people think Howard Hughes is out of business. Howard Hughes is not out of business. He's dead, but he's not out of business, okay? The guy is dead, but he's not out of business. All right, we're gonna go to 5-year on this company here, okay? We don't wanna do max because I think if we do max, we'll go all the way back to 1913 or something crazy like that. All right, so notice this. Here we are in the trend again. We're booking at 142, 92 here in 2019, and then it starts popping up and down a little bit. Now look at this, pandemic coming up. February, boom. You could tell how it was okay in February because no one really knew about the pandemic until March. Now we're at March, pandemic hits, boom, crashing down, man. All right, now pandemic. Now it's getting better. This coincides with your interest rates. Keep in mind these stocks also, okay? This is why interest rates became so low. All right, now it's inching back up. We're at 105. Whereas pre-pandemic, let's go to November 2019, we're at 108. So we're at pre-pandemic pricing right now, okay? All right, let's go one more. Let me show you this one here. All right, this is Lowe's Home Improvement. All right, this is where people buy their building supplies. This is where you get your paint, fixing up a house, getting ready to sell. You got to get new flooring, new carpet, all this stuff. All right, Lowe's Home Improvement, okay? So we're gonna do 5 years on this guy here. All right, this is my indication also of how the market's going. All right, here we go, March, look at that, same thing. Pandemic, dips down to 105. Now this stock I do own, all right? I bought this stock, you guys aren't gonna believe this. I bought this stock back right there for the 401k, baby. $29.19, I still own it today. And it's just exploded. I was kind of worried when the pandemic hit, but I was still in the positive. I wasn't too worried, okay? But now things are popping up. Let's go back to our 5-year deal. Here we go. Right now we're at $192.37. Let's go to pre-pandemic, okay? So they've really popped up. So now this portion, lumber prices are crazy also. Let's do a commodity of lumber, okay? Lumber. Okay, lumber liquidators, we'll focus lumber, CS lumber commodities. All right, we're going to do lumber commodities. Let's see, lumber commodities. I didn't spell that right, but I looked at that also. NASDAQ lumber price, latest futures. I go to these sites. There's a NASDAQ, this is pretty good. All right, my go-to is Yahoo, believe it or not, a lot of this stuff. All right, let this data load up. All right, we're loading. Data is currently not available. You got to be kidding me. I guess the lumber prices are so high, they don't know. All right, let me pop up this screen here. Let's see. All right. So lumber, we'll go with lumber again. Lumber prices. Let's see if we can't find another one. Okay, another thing to do. Okay. All right, investing, CNBC. Here we go. That was 5 days ago. Lumber future swing 10%, according to CNBC. If you look right here, CNBC. Okay. So lumber futures graded a wild trading Wednesday as traders struggled to determine if a recent pullback in wood prices has removed enough from the market. All right. Lumber futures, okay, for July at first fell 5% to 1,200 per board, 1,000 per board feet. And let's see where we're at now. Chicago Mercantile Exchange. Let's see, prices have fallen every day since lumber hit a record of $1,711 per 1,000 board foot on May the 10th. Crazy. No one's milling lumber. No one's cutting down trees. No one's doing anything, and now it's popping back up. But we were at 600 per board foot before this hit. Okay, it's just insanity. All right, it's got that. There's this little graph right here. So let's see, we got lumber CME. All right, let's see what we got here. Get out of here. Get out of here. Lumber CME. Let me type in there. See me. No, that's not it. All right, well, anyway, that's the basis behind our interest rates, our bonds, 10-year bonds, treasury bills. That's what you want to look at. Okay, so the big takeaway here we go. Key takeaways: Treasury securities are loans to the federal government. Maturities range from weeks to as many as 30 years. Because they are backed by the U.S. government, Treasury securities are seen as a safer investment relative to stocks. Bond prices and yields move in opposite directions. Falling prices boost yields, while raising prices lower yields. The 10-year yield is used as a proxy for mortgage rates. It's also seen as a sign of investor sentiment about the economy. I won't read the last one. Bottom line, all right, here's the bottom line. Follow the stocks, all right, real estate stocks. Follow the 10-year note. Follow lumber prices and other construction prices also. Metal's a big one. They do have commodities for sand, which actually makes concrete. So sand is a good commodity to watch, all right? So, but right now, if you want to refinance your home, call a lender, refinance it. Sometimes if your interest rate right now is hovering around 4%, maybe 5%, it's going to cost you $6,000 to refinance. Is it worth it? All right. I have one business loan right now that I was able to get at a fixed rate. Okay. They're not doing fixed rate for business loans anymore, but I'm at 6%. Is it worth for me to spend the 6,000 to get an adjustable rate? No, it's not. I'll just take that interest rate, deduct it off the business expense books, and then it balance everything out. Okay. So you got to look at that as well. All right. But this is James Kempski with Ibuyerpro and Mallard Realty Group. And I thank you. Subscribe if you can. This is the green screen I got behind me. Subscribe. And until the next video, thank you.